what's interesting is that you were right about Amazon in our last podcast. It's since been up about 30 to 40%. You were right about Bloom Energy. You called it around $60. It hit $300. You doubled down on Robinhood at $38. I'm really curious, how much money did you make from those trades?
So they were probably three of the biggest trades in my life. And I mean, it was 8 figures between the three. And it's been the best few months that I've had in 18 years. So it's been big, really big.
8 figures?
Oh yeah, definitely 8 figures off the 3 trades. I think Amazon was an 8-figure trade alone. So, I mean, last time I was on, I told you I was doing this, right? Like, I've been waiting for this trade for years. I've been waiting for this trade for over a decade. And I always say having a prepared mind is one of the most important things an investor can do, because it's usually during the years when there aren't any high conviction trades like that you have to prepare yourself to make the move when one comes around. And so, like, I've been waiting for it.
But how did you know when the rest of the market wasn't picking it up?
Well, I think the one thing that I'm really good at is independent thinking and not getting sucked into market noise and other people's opinions. So when I develop a high conviction thesis, like I did with Bloom, with Robinhood, especially with Amazon, I'll generally spend anywhere between 50 and 80 hours doing deep dive due diligence. So my thesis is baked. I've seen the counter argument. I know what the other side of that argument looks like. And I obviously don't agree with people that are on the other side. And then when the market made their big move against Amazon, which was, we don't believe that the $200 billion is a good idea, I thought that was patently wrong. So I was like, if that's the reason why they're going to take Amazon down is because they're spending $200 billion due to an opportunity that Amazon sees right in front of their face, I will take the other side of that bet. And Amazon has a really long history of making prudent decisions when it comes to CapEx. Now, I think a lot of investors these days, I don't know if they don't remember 15 years ago or 20 years ago, right? I don't quite understand what's happening with institutional and retail Wall Street. I think investors are making some of the most irrational, emotionally driven decisions that I've ever seen in my life. And I think they're half-baked. And I love it as an investor because you really don't have an opportunity to make it big in the market unless there is another side of the trade where a significant portion of the market disagrees with you. And then you have to be right.
So a lot of people are probably asking, why are we bringing you back on? Because I don't even know how many times it's been, but every single time we bring you on, you say something, it ends up coming true, usually in probably what we would all agree would be a shorter time period than we would have originally thought, right? You can't necessarily time the market, especially in the short term. But I put in pennies relative to you, right? I made like 30 grand and I was like, dang, like if I'm making $30,000, like Chris is probably raking it in. I'm just curious, what's the single biggest day you've had?
I think in one day I was up $5.5 million over the past few months. And I don't know if it was Bloom Energy or Amazon or both, but that was, I think, my biggest up day.
What do you do on a day like that? Do you go out to dinner? Do you celebrate or no?
It doesn't impact me anymore. The ups and the downs no longer impact me emotionally. They just simply don't. The big days up are like a nice little win, and the big days down, because I've had a few days where I've been down 3 million, and they don't really hurt. I'm just completely immune to this, guys. I've been doing this since I was 13 years old. As I told you before, this is not about making money for myself anymore. So it takes some of the pressure away. Like I'm building towards things that I think are noble and hopefully will be big for other people, my foundation, other things I want to do in life, but I'm not paying the bills with this money. So I don't let it impact me emotionally.
What are you investing in now?
So I'm probably more excited right now than I even was last time I was on the show. Okay. So I want you to think about the AI super cycle, which I've been preaching for 3.5 years, like a broken record, has 3 big waves to it. And I've been thinking about these 3 waves since day one. So the first wave of the AI super cycle was like magic. AI could think, right? Like we had that wow moment. The second wave was who builds all of the chips and the infrastructure to make AI work. Well, the third wave that hasn't hit yet is less about the companies that are building the shovels and more about the companies that are using the shovels to leverage AI to do more with less. And this is the last easy trade of the AI super cycle. And it's a trade that I've been waiting for 3 years. So why is it easy? You don't need to predict a future sci-fi world to get this trade right. All you need to be able to do is detect companies that have a very high cost structure that will benefit from the efficiencies that AI is going to bring to us over the next few years. So companies that have a lot of customer service, that have a lot of admin, companies that have a lot of logistics, a lot of white-collar workers that maybe do repetitive tasks. These are the companies that are going to benefit most from what I'm calling the AI efficiency wave, which is the last big wave of the early AI super cycle. And I don't know when it starts. I think it starts pretty soon. I think it starts in the next year, but I could be off. It might not start for another 2 years.
So then in terms of your current portfolio, you ran a lot of these stocks up, right? Like Bloom Energy went up to 300. Now it's at like 250, 260. I'm curious, are you selling Bloom Energy as it's going up? Are you reallocating funds now to these new companies that you think will benefit from replacing these higher cost, high repetitiveness, low creativity cost? You could remove all of that and supplement it with cheaper AI solutions. How are you moving your money around now?
Yeah. So first of all, Bloom Energy is one of the biggest trades of my life. As you know, I doubled down and I told you guys when it hit 77 that day, right? And now it's went up to 290 something. I think it's like 260 today. This is all over the course of a few months, right? At some point, you have concentration risk. So I did take some Bloom Energy off the table. It was painful because they were short-term gains. Now, my goal when I have a stock do what Bloom Energy did is to try to hold that stock for 12 months so I at least get long-term capital gains. That saves me, 12 or 13% tax hit. So if I believe the stock will at least stay roughly the same, I prefer to hold it rather than sell it before it hits long-term capital gains. Now with Bloom Energy, I have to have a source of funds, right? So it's one of my biggest winners, and I did decide to take some off the table. And I'm allocating even more to Amazon than I did before. I think that Amazon is the ultimate beneficiary of the AI efficiency wave because it wins with AI now 4 ways. So Amazon obviously owns AWS, which is the infrastructure layer for artificial intelligence, one of the big 4. It also owns Trainium, which is one of the largest AI chip companies in the world now. And that actually makes AI compute cheaper for all of Amazon's customers and indirectly adds a level of stickiness to AWS. So it really helps them there. But with the AI efficiency wave, Amazon Retail, which is all the products they sell, is going to benefit massively due to Amazon's use of AI internally to bring efficiencies to logistics and to the entire shopping process. And fourth, most people don't understand this, but Amazon has now become the 3rd largest digital advertising company in the world behind Google and Meta. And they'll be able to leverage this AI during this efficiency cycle to help target ads better, to enhance the creativity of advertising, and then also to personalize those ads, which I think is going to generate more revenue for Amazon while also saving them and their customers money. So with Amazon, it's not a single bet on AI. It's an entire company-wide efficiency flywheel that benefits Amazon more than any other company I've been able to identify in the world. So I've still, to this date, I'm more excited about Amazon now than I was even a few months ago because it's so obvious that this AI efficiency wave is going to hit them and hit them really hard in the near future.
Now, really quick, every business is asking themselves the same question. How do we make AI work for us? The possibilities are limitless, but guessing is too risky, and sitting on the sidelines is not an option because one thing is certain. If you're not doing it, your competitors are already making their move.
And that's where our sponsor NetSuite by Oracle comes in. It's the #1 AI cloud ERP, trusted by over 43,000 businesses to manage everything from financials and inventory to commerce, HR, and CRM, all in one unified system.
When all of your data is in one place, your AI becomes a lot smarter. It doesn't just guess. It knows. NetSuite intelligently automates routine tasks, delivers real-time insights, and helps you make fast, confident decisions that actually help drive growth.
And it's not just an add-on, it's AI that's literally built right into the system that runs your business, helping you cut costs, improve accuracy, and stay ahead of the competition.
Whether your company is making millions or even hundreds of millions, NetSuite gives you visibility and control to keep moving forward. Honestly, if I were building a business of this size, NetSuite's the only company that I have 100% confidence in.
So if your revenues are at least in the 7 figures, get our completely free business guide, Demystifying AI, at netsuite.com/clips.
Again, the guide is free for you at netsuite.com/clips, netsuite.com/clips, with the link down below in the description.